and mismanaging the credit system. In other words, not looking after your suppliers. You've got to pay them on time. If you stop paying them on time, they will probably stop supplying. So you've got to look after those. And forgetting your debts to society. Remember to pay the taxman on time. The tax office is the biggest enforcer of people into liquidation in Australia, because as a small business payer, we worry about the tax last and think, no, the tax office will be fine. They are sick and tired of that now, so be prepared. If you're behind with your taxes, you may get that call. Their focus is more on profit than cash flow. I spoke about that earlier, that profit is not, it is important, but not as important as cash flow. If you've got no forward planning, you need to know what your balance is going to be in 6 months' time. You need to plan ahead. 4 out of 5 businesses plan to fail. Has anybody heard of the Pareto principle? You heard of the 80-20 rule? Okay. Pareto was an Italian economist who found a link in the mathematical cycle of economics and gross domestic product and that with most countries. And it applies in most aspects to business. You wear 20% of your clothes, you wear 20% of your clothes 80% of the time. 20% of your clients provide you with 80% of your profit. So that applies right across the board. And here we have 4 out of 5 businesses fail to plan. That's 80%. If we had 100 businesses today that started off in 5 years' time, there'd only be 20 left. And the main reason for that is a lack of understanding with cash flow. Cash flow is one of the most single important factors in your business. And when we get a little bit of money in the bank, we tend to go out and spend it. We buy the big car, we buy the boats. If you're managing your cash flow and you know exactly what your cash flow is going to be, you can then determine whether you can afford to go and buy that flash car, still have plenty of money left to operate your business with. And chaos is poor cash flow. Chaos is not having the right systems and processes in place to run your business, to record the transactions in your business. And believe me, there are a lot of people out there that operate their business on chaos. We see it almost every day in the accounting industry. So you need to understand what the business's cash flow is. It isn't smooth. It doesn't come through the same amount every month. It's depending on your sales. If your sales are up, then you'll get good cash flow probably the month later. If the sales are down, you've got to make that up. And that's why we have banks, like Trevor here from the Bank of Queensland. They provide overdrafts to small businesses. Overdrafts should be used as a backstop to cover those peaks and troughs. In other words, your overdraft should return into credit at least every month. It should be going in and out, in and out. Is that correct? Still the same policy? Hasn't changed? Good. You need to review your debt service obligations. What are your monthly commitments? What loans, hire purchase contracts you've got out there? You need to provide for those. And you need to pay special attention to capital expenditure equipment. What are your plans? Are you going to be buying some more plant and equipment? A sale is not a sale until you collect the cash. You need to have in place a system for collection. Okay? A lot of businesses say, yes, we've got the aged debtors listing there, but when you have a look at it, most of it's probably 90 days plus. Usually by that stage, there's really no profit left in it, even if you do collect the cash. You've really lost your profit at administration costs. Under stock turnover, what that means is that you don't have enough stock to be able to provide when the sale is made. So you need to make sure you've got policies in place just to get your stock there just in time. And also paying your tax obviously requires good planning. As I said earlier, the tax office is the biggest enforcer of businesses into liquidation. And you need to obviously watch your accounts payable more closely. So we get 10 cash flow rules. One is to never run out of cash, for obvious reasons. Cash is king. That's the most important thing above all else, before profit, before turnover.